Good morning, this is David again, and for today tax tips, I'll be talking about the Bitcoin new educational letter campaign launched by the Internal Revenue Service. Bitcoin and other forms of virtual currency are gaining popularity, but many businesses, consumers, employees, and investors are still confused about how they work and how to report transactions on their federal tax returns. And the Internal Revenue Service announced a few months ago that it is targeting virtual currency users in a new educational letter campaign. The nuts and bolts. Unlike cash or credit card, small businesses generally don't accept Bitcoin payments for routine transactions. However, a growing number of larger retailers and online businesses now accept payments. Businesses can also pay employees or independent contractors with virtual currency. The trend is expected to continue, so more small businesses may soon get on board. Bitcoin has an equivalent value in real currency. It can be digitally traded between users. You can also purchase and exchange Bitcoin with real currency, such as US dollars. The most common ways to obtain Bitcoin are through virtual currency ATMs or online exchanges, which typically charge nominal transaction fees. Once you or your customers obtain Bitcoin, it can be used to pay for goods or services using Bitcoin wallet software installed on your computer or mobile device. Some merchants accept Bitcoin to avoid transaction fees charged by credit card companies and online payment providers such as PayPal. Tax reporting. Virtual currency trigger many tax related questions. The Internal Revenue Service has issued limited guidance to address them. In a 2014 guidance, the Internal Revenue Service established that virtual currency should be treated as property, not currency, for federal tax purposes. As a result, businesses that accept Bitcoin payments for goods and services must report gross income based on the fair market value of the virtual currency when it was received. This is measured in equivalent US dollars. From the buyer's perspective, purchases made using Bitcoin result in a taxable gain if the fair market value of the property received exceeds the buyer's adjusted basis in the currency exchanged. Conversely, a tax loss is incurred if the fair market value of the property received is less than its adjusted tax basis. Wages paid using virtual currency are taxable to employees and must be reported by employers on W-2 forms. They are subject to federal income tax withholding and payroll taxes based on the fair market value of the virtual currency on the date of receipt. Virtual currency payments made to independent contractors and other service providers are also taxable. In general, the rules for self-employment tax apply and payers must issue 1099 miscellaneous forms. Internal Revenue Service campaign. The Internal Revenue Service announced it is sending letters to taxpayers who potentially fail to report income and pay tax on virtual currency transactions or didn't report them properly. The letters urge taxpayers to review their tax filings and, if appropriate, amend tax returns to pay back taxes, interest, and penalties. By the end of August, more than 10,000 letters were sent to taxpayers. The names of the taxpayers were obtained through compliance efforts undertaken by the Internal Revenue Service. The Internal Revenue Service warned. The Internal Revenue Service is expanding our efforts involving virtual currency, including increased use of data analytics. Last year, the tax agency also began an audit initiative to address virtual currency non-compliance and has stated that it's an ongoing focus area for criminal cases. Please contact us if you have questions about tax considerations of accepting virtual currency or using it to make payments for your business. And if you receive a letter from the Internal Revenue Service about possible non-compliance, consult with us before responding. I hope you have enjoyed this video and don't forget to subscribe. Thank you.